I'm hard pressed to see how we're not at 100K by the end of calendar 2024. And I think this cycle takes us to 200 or 300K. And maybe at that point in time, we're a little overbought and, we come back around, come back down a bit. Well, I don't think anybody's missed the boat. I mean, I think we're still very much in the early days, and it's going to 10X and that's going to 10X again. So, I mean, from an investing point of view, you don't want to miss something that's going to go up 100X and maybe 1,000X if you talk 15, 20 years out.
Popular investment manager and sound money advocate Lawrence Lepard has one of the most bullish predictions for Bitcoin, the world's leading cryptocurrency by market cap. Not only does Larry, as he is popularly known, agree with Michael Saylor that Bitcoin will someday hit a staggering $8 million per coin in the near future, but he also believes the massive gains will continue until Bitcoin's price is at least 1,000 times higher than it is today. Larry's confidence in Bitcoin stems from what he and other sound money advocates describe as the impending, inevitable collapse of the debt-based financial system, as well as Bitcoin's many important fundamentals that set it apart from anything the world has ever seen. Larry is especially fascinated by Bitcoin's network effect. He states as much in a post he recently made on social media platform X. The post reads, "Bitcoin's gold-like store of value is the use case. But it's much better than that because there is a growing network effect. As the adoption takes place and the network becomes more valuable, it is a once-in-a-millennium opportunity. Incredible, really. I have never seen a more asymmetric opportunity. People who miss it will experience massive regret." In another post made in response to a gold bug that was questioning Bitcoin's store of value and medium of exchange use case, Larry wrote, "It is the soundest form of money ever invented. Full stop. The soundest form of money always wins. It has a superior store of value properties. The network effect, Metcalfe's law, is going to drive it to prices you cannot even imagine." In a recent interview with Jamie Curie on the Crypto Nutshell channel, Larry shares a series of super bullish price predictions on Bitcoin and explains why he is so confident about the leading cryptocurrency. As we bring you clips from the discussion, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thank you, and enjoy the video.
The major thing that you want to look for in the venture capital business is Gene Kleiner was the guy who told me this, or told it, not me, but he told it to, people. He wrote about it, is what he called dogs eating the food. You want to look for, something that is being used and there are more people using it every day. Okay. You want to look for obvious growth trends. And if you see an obvious growth trend, then you can extrapolate it out and say, if something is growing, all other things being equal, it's going to continue to grow. And one of my big winners in the internet space was a company called Netcom, which we put like $5 million into at a $15 million valuation. It got sold to AOL for, I don't know, $280 million or something. I mean, we made, $100 million. That's something that was crazy. When we were into Netcom, it was a dial-up service in the Silicon Valley. And the guy started it out of his garage, and he had people literally just dialing into his server, which was then connected to a bigger server, which then talked to the internet. And he was charging him $20 a month. And, when I found the guy, I can't remember the exact numbers, but he had, 500 subscribers, but he was adding 150 every month, and the 150 was going up. And so it was kind of like, holy shit, and before we know, by the time he was done, he had 200,000 subscribers. So, that kind of growth is just, that's evidence that something's working. And you're seeing the same thing going on in Bitcoin, by the way, right? There's just enormous, adoption and growth and increased users, and ETFs are bringing all that. Let me tell you about a couple that I missed, all right? So Amazon comes along and Google comes along. And when I started my own fund, the first thing I did was, okay, I'm going to start looking for growth at a reasonable price. And I found it in India. We were doing cell phone providers that were growing 40% a year and trading at 3 times earnings. So that worked. Okay. But I was looking in the US as well. And I saw that Amazon was growing. And I also saw that Google was growing. But in both cases, particularly in the Amazon case, they weren't making any money. And so I was putting my old finance lens on it and saying, well, yeah, it's growing, but they're growing revenues, but they're making it up and losing money and making it up in volume. And And they were able to do it because of ZIRP, okay? You know, in other words, their cost of capital was incredibly low. I mean, Jeff Bezos basically destroyed middle and Main Street American retailers because he had no cost of capital. And so he could, you know, and he went around buying, you know, he paid tons of money for warehouses and warehouse picking and all that. He could foresee where we were going, and he didn't have any cost of capital. It was stunning. But he wasn't making any money. And what I didn't realize is he was running the old monopolist play, which is to lose money until you've got a monopoly, and then you can increase your prices and make a ton of money. And so I didn't realize that was the game he was playing. And so I thought it was a flawed strategy, and so I didn't invest in it. And I deeply regret that. The one with Google was similar, but they weren't doing it so much on free capital. What I couldn't understand about Google was I used Google, but I never clicked through on the ads. But I thought to myself, how does this, this doesn't make sense. I mean, these ad people are getting duped. I mean, they're paying a ton of money to put ad on Google and to get placements on Google, but it's not working. Now, I was wrong about that, but because of that, I couldn't see it. But they were both very similar kind of network businesses that got more valuable as more users joined, okay? So I'm not going to make the mistake, a third time. So when I saw Bitcoin and I realized what it was a network of money, and it was growing, steadily and exponentially, and that everyone needs money, and that it is, truly the best form of sound money. I mean, as Saylor and Preston have said recently, there's no deflection in it. There's just 21 million of them, and that's it. It's just, to me, it's such an obvious, clear bet.
During the interview, Lepard makes several bullish price predictions for Bitcoin. While stressing the importance of ignoring short-term price movements, Larry predicts Bitcoin will finally hit the much-anticipated six figures before the end of the year. In his words, it's hard to imagine anything that could stop Bitcoin from hitting $100,000 by the end of 2024. Larry predicts even higher prices in 2025. At the peak of the cycle next year, the sound money advocate predicts Bitcoin could get as high as $200,000 to $300,000 per coin. It gets even more bullish after that. Within the next 10 to 15 years, Larry believes Bitcoin could be trading as high as $8 to $10 million per coin. He also talks about recent price movements and why prices are not higher than they are at the moment. Here are more clips from the interview.
And, you said price predictions. I mean, I have no idea where it's going tomorrow, or I don't know where it's going to be at the end of the year, although I'm guessing maybe 100K or something, but I'm absolutely certain this is going to be 200K, and then someday it's going to be 1 million, someday it's going to be 2 million, someday it's going to be 8 million per coin. I'm talking that because that's just the natural progression of, the growth of a network. That's why I'm pounding the table just to, and people getting into it, they think, well, I'm paying too much. I mean, I have a friend who's very, very wealthy, and, he knows my average cost is quite low. And, you just can't bear to pay 60 or 70 grand. I said, look, it doesn't matter. I mean, I paid, I don't know, whatever I paid. I mean, in the thousands for probably as an average. But, Max Kaiser was paying $2. And I don't regret Max. I just recognize that, someday my average cost is going to seem incredibly cheap to somebody who's paying $2 million a coin. So it's just, it's Saylor's point. I mean, it's going up forever, Laura. You can either decide, you're going to buy it eventually. People don't realize that. Everybody's going to buy this eventually. I don't think anyone realizes, or I don't think a lot of people realize that. So you might as well buy it now versus waiting and having to pay a lot more for it in the future. Bitcoin's a strange beast, and predicting the price moves day to day, week to week, month to month, who the hell knows? It surprises you, almost, at least in my experience. I've been watching it for a long time. I just dollar cost average and hodl. I don't sell. So, the ETFs are an enormous positive development. They really are. They give a lot of money access to the asset, and even today, I mean, the assets. I mean, I think it was down to 60, high 50s, 60. Look, it's still up. I don't know, 40% for the year. I mean, it's not like it's a, it's not like a disaster. I mean, a year ago this was 30, and a year before that it was 16. So, it's still kind of working, and it's going to continue to work, and so. I think the short-term swings aren't that relevant. I mean, I don't know why the price is where it is today. I don't really watch that sort of stuff that much. I mean, certainly the Mt. Gox coins are a possibility. I would think, I've noticed there've also been a lot of hedge funds that are short it. I think they're going to get their faces ripped off. I also think that one explanation that was given to me, and I think this might make some sense, is that the halving just occurred not that far ago, a couple months ago. And the miners, their reward was cut in half. And some of them had Bitcoin on their balance sheets, and some of them probably aren't making much money right now or having cash flow issues. And so I think the miners are probably in a situation where the marginal ones are having to sell the coins they've got to keep the lights on. And they're just hoping that the price is going to go higher, but it hasn't yet. And, and we saw the hash rate dip a bit, not hugely, but somewhat. I would have thought it would have gone down more. And I'm guessing that there are probably some miners that are operating uneconomically right now that haven't quite thrown in the towel yet. They're leaving the machines on because they're thinking, well, it's going to come back up. And until we get kind of that capitulation and they say, oh, I'm throwing in the towel, I'm turning these machines off, hash goes down a bit more. And then at that point in time, it can come out of the blue. I mean, we all know how this thing happens. I mean, the thing that's so wild about this asset is the way that it can really move and move fast. And that's why I say, like the hedge funds that are short this stuff, they're about to have a deeply religious experience. I mean, they don't understand. They don't understand that this shit can go up, 50, 100, 150% in months, and so, I mean, you're going to see those shorts are going to get covered so goddamn fast. And, and so I know Samson, I really like him a lot. He says $1 billion, within a year. I sure hope he's right. I don't think he is, but, I'm hard pressed to see how we're not at 100K by the end of calendar 2024. And I think this cycle takes us to 200 or 300K.
On recent price movements, independent on-chain analyst Willy probably has the best explanation about what's happening, and when the upside moves will finally resume. In a June 21st thread posted on Twitter, Wu wrote, "I'll break it down in simple terms. When does Bitcoin recover? It's when weak miners die and hash rate recovers. This one is for the record books as it's taking a lot of time for miner capitulation post-halving. This is the 2017 hash rate recovery, 24 days, which happens to coincide with the weak summer months of June and July. This was the 2020 recovery, 8 days. And today, we are still waiting for the miners to properly die. It's been 61 days so far." In a more recent thread Wu posted on June 27th, the analyst writes about short liquidations and how some more purge is needed before the moon days can begin. Some of the posts from the thread read, "It's nice to see some of the speculation getting purged the last few days. Still a bit heavy, and there's still too much speculation. Bears are still in control. But Bitcoin got so oversold in the liquidations that it's really hard to go lower without an uptick. For a fundamental bullish structure, we need demand outstripping supply. And we are still waiting on hash rate to bounce, which is a leading sign that miners have stopped selling to fund hardware upgrades." In another post, Wu adds, "So, be prepared for very boring price action for many more weeks. It's not moon boy time. It's time for speculators to liquidate themselves, or until they get bored and close positions. Then we can move on. The best path here is to stack spot and let degens die." Wu is predicting a few more weeks of liquidations, which he says in the very extreme case could take Bitcoin down to $54,000 before prices swiftly pick up again. But they will certainly pick up before the year ends, especially when the Fed announces a rate cut, and prices will soar again. Please share your thoughts on Larry Lepard's interview, his super bullish price predictions, and Willy Wu's tweet in the comments section below. If you like this video, also ensure you give this video a thumbs up, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.